Good afternoon. This is Glenn Wattum. I'm with MOSS ADAMS, and I am pleased to be presenting at ABC Western Washington 2021 Economic Symposium. Today, we're going to go through a little update on some employee benefits, basically related to the PPP loan. And hopefully you'll find this update helpful to you. So with that, let's get started. Okay, well, here's just the stuff that says basically you can't believe anything I say, but you can. And so that's just required disclosure that you got on everything. All right, here's the update. And we're going to go over the Paycheck protection update. And we're basically two items in here. Two items is going to be the update to the Paycheck protection program, and then update on the employee retention tax credit expansion. And that has actually got some real benefit to it. So that'd be something to really pay attention to. And this is all coming out of the Consolidation Appropriations Act of 2021 that was passed at the end of December. It had a number of tax provisions in it, but it also had some key updates on the Paycheck protection program. Going backwards. All right, and so here's just to frame the discussion. Here's how it's basically all related to COVID, and here's how the history of the laws evolved. You first had the Family Coronavirus Response Act. That was in March, and that brought in the paid sick leave and the family leave credits. And then the major act was the CARES Act. That was in March, which significantly brought in the Paycheck protection program and the employee retention credit. Then there was a slice in there where you get to the Consolidated Act at 2021, that was in December, but there was a slice right in there in May that is not listed on the screen. That was just an update called the Flexibility Care Act that updated some elements of the PPP loan. As many of you probably were aware, there was a lot of questions that evolved as that act was developed, basically with the PPP, and that clarified a few things. And then again, December basically is an expansion. So with that, what we have is basically round two of the Paycheck protection program. And there are some significant updates. So the first one is the Act provides that the expenses that were forgiven under the PPP Act may now be deducted. As you may recall, earlier in the year when they brought in the Paycheck protection program initially, it is not taxable to the extent it's forgiven. The money is used for the appropriate purposes for payroll and other qualifying expenses. The loan, when it was forgiven, is not taxable. But then the IRS came in and said, yeah, well, okay, but then we're going to make the expenses not deductible. Well, that was a significant development that basically means that the loan was, by not allowing the expenses, the loan was taxable again. Well, Congress came back through in December and they corrected that. They say now that the expenses are deductible, so which is a good thing. So basically now the loan is not taxable and the expenses are fully deductible, which is a significant benefit. The other side of it is to the extent that you're a flow-through entity, meaning an S corp or a partnership, not only is the loan not taxable, but the amount of the loan forgiveness does add or increase your basis, so that it is available to offset deductions in that. And then the other significant item in there is that now with the Act passed in December, it clarifies that there are some under the SBA, there are some economic injury disaster loans, and that before those were reducing the amount of forgiveness. Now, to the extent that you have one of those loans as well as a PPP loan, it does not reduce the PPP loan. So basically, you have the potential for full forgiveness on the loan, depending on the use of the funds. Okay, now this is one significant development, particularly if you're operating in a number of states. The states, by and large, they often will piggyback the federal law and follow them. But in this case, they have not kept up with the change in the law, particularly that happened in December. So there are a number of states, California being one of them, where they do not follow that conformity, particularly with the expenses that are now allowed as a deductible for federal purposes. And whether they will, I have not seen it be updated yet, but you need to pay attention to your state filings, contact your CPA, discuss it with them, because you may get an unexpected answer depending on what state you file in. So do pay attention to that. Okay, so now we have the second round of PPP loans, and there's round two, and there's two elements to it. There's the second draw, which we'll talk about now, and then there's the opportunity if you haven't gotten a loan before, first draw. So basically, the second draw basically is referring to folks that are businesses that have already received a loan on the first round of the CARES Act. You're still eligible for a second loan, but there are some specific parameters to it. And basically, the parameters are the size requirement is that you need to be fewer than 300 employees. And now, unlike the last time, you actually need to show that you've been economically hurt by the pandemic. And how they measure that is a drop in gross receipts of 25% in any quarter in 2020 compared to 2019. So for example, you could be up 10% in Q1, 15% in Q2, maybe break even in Q3, but if Q4 in 2020 compared to Q4 in 2019, you're down by 26%, you would qualify. So now you're in the game, you can qualify. Then the next step is that you must have already used the full amount of the loan, or the first PPP loan, in order to qualify. And then the protocol is the same for how much you can get. It's capped at $2 million total. That's the max loan you can get, and it's calculated basically 2.5 times your average monthly payroll cost of 2020 or 2019. So you calculate your average monthly payroll cost, multiply that by 2.5, and then if it's below 2 million, that's your loan to apply for, and if it's above 2 million, you're capped at 2. Okay, so now when it says PPP1 reopened, now these are for businesses that did not apply for a loan in the first go around. And so now we're back to the original eligibility rules, which is generally less than 500 employees. And you'll note there's no requirement that you have to have a reduction or gross receipts. It's just based on the number of employees you have. And of course, well, those loans have been open since January 11th. And then I believe there are some eligibility requirements. There is some eligibility requirements outside. Like there are instances where you can be over 500 employees to the extent you're in a particular NIC code that the SBA designates that is usual standard for you to have more than. But that's something you should look into. If you are over 500 employees, you still may qualify. And then note that the loans, this is true for both the round two, the second draw, as well as this first round reopened, that they must be applied for by March 31st. But I have heard rumblings that may be expanded. What I'd strongly encourage you to do, to the extent you're looking at getting a loan, is be in contact with your banker. The bankers are very up to date, up to speed on these rules, and they know when the funding is available and when it will stop. So that would be a very good place to start. So tentatively supposed to be March 31st, but I have heard that it may continue beyond that. So let's keep your eye on that. Okay, then there are some limited opportunities where if you did have a PPP loan in round one, that you can expand that loan, and they're kind of somewhat common sense situations. Basically, there were some instances where people had given the money back, or given some of it back, or they didn't accept all the funds that they could get approved for. So if you accepted less, basically by either accepting less or you gave some of it back, you have the opportunity to now reapply for those funds again. And then there are some revisions to the seasonal employer calculations that had impacted, the amount of loan. And if with the revised calculations, you can increase that. You can, under the separate loan, under the PPP Loan 1 program, get a loan additional funding now. And then also for certain partnerships, again, this was a calculation issue on how they calculate loans for partnerships. And it had been somewhat confusing at the beginning to calculate the amount. Now, to the extent they've made it very clear that the general partners of partners in a partnership, to the extent they have self-employed income, are eligible to be included in the calculation, you can, in those instances, go back under this program and get additional funding. What's important about this, if you qualify in this limited scope area, there's no requirement for to document reduction in gross receipts. You just have to show that you qualify for more under the original program. Okay, so other changes. So what we originally had 8, and then it changed to 24 weeks of eligibility. It was kind of an either or under the CARES Act. That was after the Flexibility Act that clarified it in June, but you can go 8 or 24 weeks. Now the program's changed to say that you can choose any period in between 8 and 24 weeks. In order for the use of the funds. Now that's important because you need to be strategic on looking at your payroll. To the extent that you're having any decline in employment, but you're still spending the money, you got to pick the appropriate period that will work to maximize the amount of the forgiveness. So there is some key strategy to play there to monitor your payroll, particularly if for some reason you're having a decline in employment, because that's a factor that could decrease the amount of forgiveness. But if you're spending money on payroll, there's kind of a balancing act there to see where's the best period to make sure you get the maximum forgiveness. And then there is some streamlined forgiveness for borrowers with loans under 150K that can make the application for forgiveness a little easier. And again, forgiveness is no longer reduced by the SBA disaster loss grant. And then they did expand the amount of non-payroll forgiveness. Now, as you recall, there's still a requirement that majority of the cost, I believe it's at 60%, be spent on payroll, but you can spend additional costs on. They did have the original amount was somewhat limited on where you could spend the money, but they've expanded where you could spend the money in that 40% bucket to see the items on here: software, cloud computing. You see, to the extent that any of your property was damaged and it wasn't covered by insurance and any type of disturbance, that basically sounds like, and if there's any riot damage, it sounds like to me. And then another big one is covered supplier cost. To the extent that you have suppliers that are essential to the business, that's a nice bucket of costs that you can include. And then the last one is covered worker protection costs, which is basically the increased cost to protect the employees relative to the pandemic. This bucket, what we have seen is some businesses have just been saying with the expanded cover period that they just apply for it with their payroll and it covers everything and they're somewhat done. But as you'll see in a moment, we've got the employer retention credit. And that employer retention credit is also based on payroll, which we can't double dip on the same dollars used for PPP forgiveness. And so you'll see that there is a benefit to the extent when you're doing the math that if you have dollars in these buckets, it may be worth applying for, even if you've got full coverage for the forgiveness with this payroll. Okay, this is the area I was talking about now, the employee retention credit. Okay, so the Act did a couple of really good things. Again, referring to the Act in December. And number one, it expanded it to June 30, 2021. And then it did enhance some of the qualifying employer requirements, but those are not available retroactive to 2020. They're only available from January through June. But then there are a couple of key changes retroactively that you can take advantage of now to 2020. And basically that requirement is that initially, if you apply for a PPP loan, the rule was thou shalt not get the employee retention credit. Well, they've waived that. I think that was probably particular now to the fact when they expanded the cover period, you have a lot of payroll that's flowing through there, some which may apply for the PPP loan, but the other available remaining amount potentially could be used for this in employee retention credit. And then in new employers, again, they have expanded. There's some that you can apply for it, even if non-existent for all of 2019. So here, this is the eligibility for it, and you'll see we've got from March to December 31 of 2020, and then we've got the qualifications for January to June 30, 2021. And what you'll find now, the first one is who is eligible. Now there is a quantitative test, and then there's more of a subjective test. For the quantitative test, for 2020, if you had a drop in gross receipts year over year of 50% for any quarter from March 13th to December 31st, you would qualify. Now that could be somewhat restrictive, but if you have that math, you're in, and that's a good answer for getting the credit. But then for January to June, they reduced it to only a 20% reduction. So if you still have a 20% reduction, you qualify. Now, if you don't meet those quantitative tests, you can see the upper one there is any business who was partially or fully suspended due to emergency orders from appropriate government authorities that limited basically your business, travel, or group meetings. Now that's a mouthful about what does that mean, but to the extent that there was a governmental shutdown due to COVID that was full or partial, you would qualify. And there's no test for the amount of gross receipts. It's just that you need to be able to document the government shutdown that impacted the business, and then you're qualified and you're in the game at least to continue and calculating credit. So assume you qualify, then there is the credit is there's a different answer for employees for businesses with 100 employees or less, or more than 100 employees. And the difference is, so once they qualify, if you are more than 100 employees, you only qualify if you paid employees that weren't working. It says providing service, so it basically means that weren't working. If you're less than 100 employees, 100 employees or less, you qualify even on the wages that you did pay while they were working. And so what the benefit is for 2020, it is the creditable wages are up to $10,000 in any given quarter, a credit of 50% for a total of $5,000 per employee. So that is $5,000 up to, if the employees employed, up to $10,000 in any given quarter, or cumulatively in the quarters, because the maximum credit it can get is $5,000. And so now then, so that's important to the extent that you maybe didn't apply for this credit because you had a PPP loan, you can reach back and get the credit for 2020 even now. So if you had, let's just say you have just 20 employees and you meet the qualification requirements of a partial shutdown, and they're all paid in the period from March to December, they're all paid at least $10,000. That is in wages, in compensation. That's a credit of 20 times 5. That's a credit of $100,000. So you can see it's of great value. And then for 2021, they've loosened it up even a bit more, where if that requirement that the employee requirement is now moved up to 500. So if you have 500 less employees and you meet the requirement that you have a partial shutdown or a reduction in gross receipts, then you qualify the credit regardless of whether the employees were working or not working. You qualify for the credit regarding whether you're paying them to work or not work. And the credit has enhanced to up to $7,000, 70% of compensation, and the total credit is available as potentially up to $14,000 per employee. So these are credits. They're not to be paid back. So it's definitely something that can an opportunity to generate some cash for the business by reducing your payroll taxes. And again, this is just basically stating what I said earlier, in that they retroactively is the keyword there, waive the restriction on PPP loans. So if you have a PPP loan in 2020, you are still eligible to claim the credit. And then how you claim the credit? There are, the credit is basically claimed on Form 941, and you can credit up to the amount of the, it's up to the amount of the employer portion of Social Security taxes. That's what it's credited against. And you take it on the Form 941, or if it's, if the money is desired earlier, then when you file the 941, you can actually apply for it on a Form 71, maybe used to claim it in advance of filing the current 941. And then to the extent that you are now, you have not claimed the credit at all in 2020, good news, the retroactive application makes you eligible, and you can claim it by filing an amended Form 941. And you have up to 3 years from the date the original return is filed, or 2 years from the date tax is paid. So you have some time, and it'd be well worth it to evaluate whether you qualify for this in 2020. Okay, so there's no double benefits. So the same wages, again, can't be used to the extent that you are claiming anything under any of these programs. So what that gets down to is just going to be documentation tracking issue to make sure that you have the qualifying wages in play to take advantage of this, and that you haven't claimed it under any of these other programs. So that was a quick overview on both the PPP loan update and the employer tax credit. Did not talk a lot about forgiveness. If you do have questions on forgiveness, on the calculations of them, anything related to that, we'd be happy to discuss those issues with you as well. But particular to what we presented today, there is looking at the PPP loan. Number one, put on there, contact your banker, because they know the programs very, very well. And this is supposed to expire March 31st, but I have heard rumblings that it may be extended. So check into that and confirm if it is. And so under the PPP loan, again, there are two options. If you already received a PPP loan, you can still apply for a second, but to get the second round, you have to have shown demonstrated a decline of 25% in revenue in any quarter in 2020. And you have to have less than 300 employees. And then the round one reopened is basically, if you never got a loan, you can still get one, but you generally have to have less than 500 employees. And at the first PPP loan requirement, you don't have to have any of the 25% reduction in revenue to test anything like that. You qualify. So that's really good. And then the employee retention tax credit. Again, this is a benefit we strongly encourage all our clients encourage you to pursue, because this is just leaving dollars on the table, basically getting some of your tax dollars back if you don't get these. The easy answer again is for 2020. If you haven't claimed it, there's new lesser. Maybe you hadn't claimed it because the PPP loan was in play. Now that restriction's been removed, so you can go back again and get that refund. Again, there is two requirements in that. You need to check the qualification of whether you were shut down by a government order or if you had declining gross receipts. Either of those two will get you there. And then for 2021 as well, check the eligibility requirements, similar again. And the dollar amount is actually incrementally increased in 2021. So there is some sizable dollars there available to you. And then here, I provided just a couple of what I think are some useful links for you. First one is just to our website that has COVID-19 implications. It has articles on the issues that have been discussed here, as well as other business and tax-related articles relative to COVID-19. And then I did put in a link to the PPP frequently asked questions, which are quite extensive, and you can see it was updated as of 3/12, so it's current. and it will answer a whole host in a numeric format of a bunch of questions that relative to qualifying for the loan that may be helpful. Then relative to the employer retention tax credit, I did put a link into the notice 21, IRS notice 2021-20. That's a long one. That's probably 100 pages, but it does provide the full detail of aspects of the credit. And then maybe a little bit more readable format is I did put up the IRS frequently asked questions, and it'll bucket you to specific questions about, do I qualify? How do I calculate the employees? You know, what employees qualify? How do I apply for the credit? There are all those elements there. The last thing I again say is just we are available. I've listed my contact information here. But as MOSS ADAMS, we're available to consult or just answer questions on any of these topics. We're actively calculating both the credit and assisting with the PPP loan forgiveness for many of our clients, and we'd be more than happy to discuss with you and answer any questions you may have on any of these topics. So feel free to contact me, and we'd love to chat with you. Hopefully this is helpful, and you have a good day.